What has trading Bitcoin and the NBA got in common? If your 3 point percentage is 40% or above, you're amongst the world's elite. You're a Steph Curry. Well, guess what? It's the same with crypto trading, and that's going to be the focus of today's content. So, like, subscribe, hit the bell notification. My name is Jiggy. I'm the award winning author of The Extraordinary New Venture Capital Opportunity How to Invest Like a Pro, featured in the best selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on cryptocurrency. So, let's dive straight in and check out the stats. All right, NBA all-time three-point leaders. Steph is near the top. He's on the heels of Stephen Kerr. Let me just pull up this cursor so we can really look at these numbers, right? The NBA. So let's think about this logically. It's a bit crazy if you think about it. These guys get paid millions every single year to miss around 60% of the time when they're taking three-point shots. So Steph Curry, his three-point shot average is 44.4%, right? That's the world's elite. And why I bring this to your attention is expectations. People expect to be right or even get every single shot in, and find it difficult to accept when the shot doesn't go in. Well, that's what we're going to look at when we're trading Bitcoin. So we've got a Bitcoin chart over here. And by the way, if you want access to this very Bitcoin chart with my analysis, the settings, everything that you see, literally the price and everything else, you can actually now join my R15 Crypto Gym for £1. You get a 7-day trial for £1. You'll get access to some of my key charts. You'll get access to my Telegram group. You'll get a 7-day bootcamp, which is going to talk about Elliott waves, Fibonacci, price, and some key lessons that you want to really be paying attention to. But we also do daily workouts. At the moment, we're focused on Solana coin and BNB. So with Bitcoin, what I'm going to talk about today is a short trade that I'm in at the moment. Went short yesterday. And why? But the thinking is absolutely key. The amateurs get very personal and very attached to the outcome. Naturally so, right? If you're not used to trading, you get attached to the outcome. Whereas the pros are neutral to the outcome. All we can have control over is consistently identifying the edge and then trading that edge with consistency, with confidence, in a fearless manner, but without being reckless. In other words, you have risk management, capital exposure. How much are you willing to risk to find out if you're right? So with Bitcoin, we've been probably following me in this for a while. Overlapping waves, right? So we said it looks like a correction. The momentum, if you look over here, the blue line is below the red. So we go, right, that's a shorting opportunity. Simple. We've got pattern, we got price, we got some time analysis, and then we also got momentum over here. So then I drop down to an hourly chart. I'm going to go into detail here because I don't care about the outcome. You cannot care about the outcome, which is a bit of a paradox because you're trading to make money, right? You're trading to make money. So how can you not care about the outcome? It's not that we don't care. It's more the fact that we don't have control over the outcome. And it's knowing what you have control over and what you don't have control over. So what I'm going to do, I'm going to just take this data back a couple of things till yesterday. And the analysis that I did for Bitcoin yesterday is very simple. So if I just show you the daily chart again in the top right-hand corner, we got this bearish reversal over here. So we're looking for a short trade opportunity. So we can go short if I just draw it here on a 1-bar low or on a swing low. But what is also good practice is you can drop down to a lower degree time frame to see if there's a clearer pattern unfolding. Sometimes there is, and sometimes there isn't. So when we drop down to an hourly chart, what I spotted really clearly, and you can spot this too, right? It's relatively obvious once you see it, is we got this nice move down, and then we've got a 3-wave structure to the upside, which is typical of an ABC correction. ABC zigzags is probably the most common type of correction. And when we see them, we want to take advantage of that information. So let me just draw it out here just so it's clear and we're seeing the same thing. We've got a nice A, what looks like a B, and a potential wave C. But then I like to have a pattern reversal signal before going short. So what should the market do if, and that will give us confirmation if it's going to continue to a new low going down over here? Right, well, you can either go tight to the market on a swing low. We can go for a wave overlap or on this swing low over here. So I chose this one because this is quite a safe entry zone. More often than not, if this wave low gets taken out, it's highly probable that this will it will hold, right? So you simply do this as the following, right? You're Steph Curry, right? We know these stats, right? We're in position to take the shot. Someone's passed us the ball. We got the opening, but we take the shot. What is the shot? Well, we go short on this swing low. We put in an order just below, by the way, just below the swing low. So we see what the price is, just a little bit below because we want the market to follow through. And where should the stop loss go? Well, what should the market not do if we are correct? Well, if this is an A, B, C correction, then the market should not go higher than this. Can it go higher than this? Well, yeah, absolutely. And that's why we have our stop loss. So we protect ourselves with acceptable capital exposure. In other words, if we get stopped out, that's one of the 60% of the missed shots. And if we don't get stopped out and it unfolds our way, that's one of the 40 to 44% or 44.4% if we're Steph Curry. And there you have it. That's the simplicity of the whole thing. So now what I'm going to do is I'm just going to unfold the bars, bar by bar. And we can see that the market triggered us in. So now we're in the trade. No action required. And then all we simply do is just get it up to where it is right now. So it's running at break even or a small profit thereabouts. But what are we looking for? Well, what I'm looking for, I'm going to go back into the daily chart. And this is important because if you're new to trading, you want to manage your expectations. And if Steph Curry is only getting 44.4% and the top elite traders get around 40%, 30%, 40%, if you have 50%, you're at the Steph Curry level and above in terms of trading, right? But you got to remember, when the shots go in, we make a 3 times, 4 times, maybe 5 times or a 2 times risk reward ratio. And when we're wrong, we have a break even, take a small profit or take a small loss. And that's the name of the game. And that's really, really important to understand because I find that people get that wrong time and time again. So now what are the expectations? Well, if we just now zoom in like this, we got 2 expectations. I'm going to actually make it a bit bigger. And by the way, if you want access to this chart, if you join the R15 Crypto Gym, £1 for a 7-day trial. There's loads of goodies, including having access to this chart with all the analysis. So what do we have here? Right, I'm going to show you something. I'm going to clean this up for you. Well, I'm going to make a logic of, because sometimes there's a lot of information. We've got 2 boxes, 2 green boxes. I'm actually just going to adjust the one at the bottom to over here. More like this. Right, so I have a minimum expectation. So if we're incorrect, like if the shot doesn't go in, what is the minimum that the market should do? Let me just get rid of this as well. Well, more often than not, the market will likely go sideways to down at least to this 50% mark. Right, so that's around, what, 21,600 thereabouts, yeah, in terms of Bitcoin. And then we're going to manage half of our position here and assume we're wrong. Get risk-free, lock in some small amount of profits. So if the shot doesn't go in, it gets stopped out like so, ideally you want to make a small profit. And then you can live to fight another day, so you don't lose no points. But what we anticipate is that the market is going to continue to the downside, and that's going to be the second half of our position. What are some other key indicators or factors that we can take into account over here? Well, what we can do is we can look at the rhythm of Bitcoin. How long did it take for it to go from this high to this low? And even from this high to this low, this is the closing low over here. Well, if we measure that and we project it from this current high, we do the same with this one over here. Well, guess what? We get these red vertical lines. That's what these represent. So these tell us is more than likely Bitcoin on the daily is going to go sideways to down for a couple more days. The momentum is also bearish. And why I bring this up, right, is, to be totally honest, is reading and hearing some of my own community on how they are with stop losses and getting stopped out. And stopped out is a good thing, right? Okay, no one obviously wants to lose money in any trade, but a stop loss is there to protect you. It's there to protect you so you can limit your capital exposure to 2%, 3% maximum. Often it's 1%. So if we're wrong, maximum we can lose is 1 or 2%. If we're right, we can get 2x, 3x, 4x, 5x, maybe even more than that amount. And then we can compound that position as well. So what does Bitcoin and the NBA have in common? Well, the NBA all-time three-point leaders, the percentage shots going in, if you look at the top, it's 44, 45%. If you look at the bottom in the top, what is it, top 10? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Top 15 is above 40%. So now, if you can get to 40%, so 4 out of 10 shots going in, then you're amongst the world's elite when it comes to trading. However, there's another thing I want to bring to your attention. Is trade management. The key and the secret to sustaining a long-term growth curve in your equity, in your crypto, is trade management and risk management. I want to bring one last concept to your mind before we finish up today. It's this. Let's say we entered this trade. In fact, let's just go to the hourly because it'll be easier to show you. I'm gonna get rid of some of these. I'm gonna go Control Alt. I think it's this. Yeah, it's gonna get rid of some of these and do this. All right, this is what I want you to think about. Right, I'm just gonna draw on this chart. Right, so we saw the market go down. We saw an A, B, C style correction, and we said we're gonna go short on the swing low, and we've been triggered into the trade over here. Right, that's all fine. Yeah, that's great. Makes sense. Thumbs up. So we're in the trade. Now let's just say we're risking 2%, right? So we've got 2% risk. So if you've got a 10 grand account, 2% is $200. If you've got a 100 grand account, 2% is $2,000. If you've got $1 million account, 2% is $20,000. So it's all relative, right? But it's 2%. So that makes sense, right? And now what I want you to think is, okay, if we're wrong, let's just say when we're wrong, what if we could manage our position where we lose 0? Or even make a small profit, even if it's we make 1%, when we're wrong. And when we're right, what if we make 10%? Like a 5 times multiple. This is the art and the science really on risk management, because it's not just about identifying the high probability trade and then having an entry in a logical, mechanical, non-emotional way, but then how are you going to manage the position? All right, so this is what we do. I look at this. I'm going to do it in just drawings like so. I look at this and I go, okay, if we're wrong, what's likely the minimum that Bitcoin is going to do? Well, it's likely going to mimic this move to the downside. So we've got this move to the downside. It's more than likely going to do a similar move to this to the downside as a minimum, right? So we go, okay, if that minimum is achieved, then we want to have a risk management strategy where we can take some profits or lock in some profits and ideally become risk-free. If it's logical, because let's just say this market has done this, and now it's moving down, well, we can also consider moving our other stop loss above this point, which reduces our capital exposure. So I'm bringing this to your attention because it's about risk management. Believe it or not, the best on the planet when it comes to trading, they don't focus on profits. They focus on capital preservation and consistency. Identify the edge, trade the edge. The trend is your friend. Ride it until its end, until it reaches its bend. And then risk management, meticulous risk management, but knowing that when we take the shot, there's always going to be an opportunity to miss that shot. So again, I'm just going to finish up on this. If Steph Curry is 40%, well, if we can get realistic and go, right, 4 out of 10 is what great looks like. And if we compound that consistently over a year, that's a phenomenal portfolio. And if you can do the numbers, then you'll see that as well. So let me know how you found today's content, because today was a bit of a reality check. But also join me in the R15 Crypto Gym is in the description link below. You'll get access to the chart on Bitcoin, daily workouts in Solana, Telegram, my private Telegram group. We do some workshops on the weekend. We do a lot of value. But you can test it all out for £1. So very, very little risk on your part. If you like it, you stay and we can grow together over the coming weeks, months, and years, because we have a very clear 10-year mission and a vision. So let's finish on a quote think chapter 4. Chapter 4 is going to be the most relevant one today. I think it's chapter 4. Here we go. Yes, chapter 4 from Benjamin Franklin. He or she who is good for making excuses is seldom good for anything else. The way a person does one thing is the way they tend to do most things. And I'm always listening at, the type of questions or comments people tend to make and how people are talking to themselves and others. And it's really, really important to understand that we as human beings operate 95% unconsciously. That's what neuroscience shows. It shows we're wired, hardwired in a certain way, and we operate 95% consciously. So it almost doesn't matter what you think consciously, is what's in the unconscious, in the deeper part of the mind. So when you're talking and when you're thinking, well, guess what? You're reinforcing certain behaviors into the unconscious. So you want to take control of that life forming process called thoughts and knowing what expectations and good looks like and what a stop loss is. So it's to have these sayings, like you will hear me constantly repeat, the trend is your friend, ride it until its end, until it reaches its bend. Right, bang, that's in my unconscious. Right, then you may hear me say something like, beneath every success is the mountain of necessary failure. Bang, that's in the unconscious. We want to know the 40% rule, right? We identify an edge, we trade it without hesitation, without, with confidence in a fearless manner, but without being reckless. So these are like mini programs that we're instilling in our minds and reinforcing the correct behavior so we can be like Steph Curry when we're coming onto the basketball court. But here is a cryptocurrency court where we can take those shots consistently. And if we get stopped out, that's a part of doing business in trading. That's why you risk 2%, right? If we know it was going to be right every single time, we would risk 100%, right? We wouldn't risk anything less. But that's not the name of the game. The art and the science is we get into a good position to take the shot and we take the shot. If we miss, we are great. If the opportunity comes, we take the shot again. And if you're consistent and you've got a consistent good edge, you have to have a good edge, by the way. You want to have a good edge. We use momentum, pattern price, and time. Fibonacci price, Fibonacci time, pattern in terms of Elliott wave on 2 degrees, and 2 degrees of time frame momentum, weekly and a daily, and then even a daily and an hourly chart. When you coincide all of those, it's called a confluence of events, and then you become the casino. So today was really about what is a stop loss and why are you using one? And if you get stopped out, take it on the chin. 6 out of 10 times, you're going to get stopped out. That's what it takes to be Steph Curry on the crypto courts, right? So you have to kind of get that tough chin and don't cry about it. Then it's about, right, when you are right though, 40% of the time, 30% of the time, even 20% of the time, is to ride that trend, compound that trend, and make sure you give it breathing space to really, really unfold. And then 20 to 40% of your trades are going to give you 60 to 80% of your results. All right, so like, subscribe, hit the bell notification. Join me tomorrow in the R15 Crypto Gym, £1 for a 7-day trial. I will see you there.